It's that time of the year where, Faye, all of us have to think about tax planning.
Unfortunately, Nikunj, we should have started thinking at the beginning of the year, but now since we have only a few days left, let me bring in Gaurav, our certified financial planner, who's on the show right now. Gaurav, a lot of people getting in touch with us right now. The tax quarter is here. Now, where would you like us, to start looking for tax saving, and what should we keep in mind? Time is running out.
Yeah, Faye, you're right. I mean, even as a financial planner, we get a lot of calls from our clients and emails saying that now it's a tax season. What should we do to save that Section 80C, to claim that Section 80C benefit? Now, this is ideally not a right strategy. Ideally, you should start planning for your tax saving from the month of April. Having said that, as far as this year is concerned, it's a little too late. But in any case, whether you're starting from April or you're doing it now, focus on your financial goals. Our Income Tax Act has been enacted so beautifully that as long as you keep focusing on your financial goals, tax benefits will follow. And here is how it works. Let's look at your basic housing need. Now, if you're staying in a rented premises, there is tax benefit that comes to you, Section 80GG. If you're going to take a housing loan, when you pay interest, there is tax benefit. When you repay your principal amount, there is tax benefit. Let's look at education, which is the second need. For fees paid for school children, there is tax benefit under Section 80C. And if you have elder children, if you have taken a education loan, the interest that you pay, there is Section 80E benefit. Next is life insurance. In case of death of a family member, family suffers financial loss, and hence if you are paying a life insurance premium, there is tax benefit again. If you want to save and accumulate corpus for retirement, there are pension products recommended. We would recommend you, instead of going for pension products from life insurance companies which are a little high on expenses, there are some mutual funds which has pension product which qualify for Section 80C, or you can simply look at an equity linked savings scheme, which is a mutual fund scheme which puts into equity. You can keep investing regularly to create a retirement corpus. If you're already retired and you want regular income coming in, pick up senior citizen savings scheme, because investment into senior citizen savings scheme also help you for tax benefit. In fact, for accumulating retirement corpus, I'm just going back, you can even look at PPF, you can look at contribution from employee, all these qualify for tax benefit. If you have goals other than this, if you have goals which are long-term in nature, and if you want to put in equity-linked savings scheme is one option which will get you tax benefit. Rajiv Gandhi, again, the scheme that we have will also get you tax benefit. And if you're saving for a near-term goal, say 5 years, if you want to look at debt instruments, there is bank fixed deposit of 5 years, there is national savings certificate.
Right, so a lot of big list there of investments that we can still use even now to save tax for this year. In fact, Gaurav, we have a question from one of our viewers. John Martin has written in. He's been working abroad. He plans to retire next year. He has 10 lakh rupees he's saved up, and he wants a monthly return of 15,000 rupees from that money when he moves back to India next year. Where should he invest that money?
Faye, what he's asking for is about a return of 1,80,000 on a corpus of 10 lakhs. And that too is a time horizon of 1 year. Now this is a little difficult because we are talking about almost an 18% return on a 10 lakh investment, which is not possible. That's a little too risky. Usually it is safer to assume that return of about 8 to 10% in a debt instrument. So there are two options. If he really wants 1,80,000, he should put in a larger amount, or he should reduce his requirement. Now to get a regular income, the options that he has is, one is, depending on his age, he can look at senior citizen savings scheme if he qualifies. Now he is an NRI, so what his status eventually will be. There is post office monthly income scheme where he can put in money into fixed deposits, which gives him regular return. He can also consider purchasing certain tax-free bonds that are there. Only thing is, these tax-free bonds will not give you a monthly income. It will give you a return, some of them 6 monthly, some of them yearly, and hence only when the corpus comes in, there will be another one more cash management. Cash flow management will have to be done, because then that money will have to be parked somewhere. So based on how much money he is willing to bring onto table, he should consider debt instruments where he can park 10 lakh right now and then convert into some regular income products at the end of 1 year whenever he wants a pension coming in or regular inflow happening month on month.
All right, many thanks, Gaurav, for answering our questions. If you have a question for us on our Personal Finance Corner, write to us on the email ID on your screen right now.